Hey YouTube, this is Zach with Achilles Financial, and today we are going to review some of the biggest earnings on the market, including really the top companies that make up the S&P 500 and 3 of 4 trillion-dollar companies. So again, we're going to be looking at Amazon, we're going to be looking at Apple, Facebook, Google, and what I want to walk through today is how you can use a call option to potentially have 100% return in a single trade in a single day. So the important thing that we're going to be looking at to do that is A, how good were the earnings? Why should we be impressed? And B, how you can make this trade. So that being said, what I have here on the screen is SPY, or essentially an ETF that tracks the S&P 500. And I don't think we truly understand how big of a deal it is that we've essentially moved up 1 full percent, but 300 points on a ETF that encompasses the entire market. And again, this is largely based on optimism surrounding the fact that 4 out of 4 of the largest companies in the United States and on Wall Street beat expectations. And it was not small by any means in terms of those beats. So what companies are we looking at? Why are their earnings important, and what does this mean for Friday? Well, the first thing is, as you can see, we just broke to new highs. I honestly think that tomorrow is going to be a 330 type of day. Just let me show you the 3-month trajectory that you can see here on the screen. And then as you can see here, we're almost positive for the year on the S&P 500. And again, you can see right here that we're not that far off. We've got our 52-week high here. I honestly think that we may break it before 2 weeks into August. It depends on some of what we're seeing from Congress. Are we going to get stimulus? But there is a lot that goes into this trading and what we're looking at here. That being said, I do want to highlight one thing that you'll start seeing on this channel is that I am switching more and more money into my TD Ameritrade account. As we look at some of the options here, I want to highlight that I just feel like I can evaluate options better on Thinkorswim, as well as it's just overall more powerful platform. It is still free, so it just has a lot more resources, and I would highly recommend to any of you who are either passive traders and just don't look at all of this stuff. I just think that TD Ameritrade has more options and provides more support, and you don't have to be on a wait list to supply DRIP, which is the dividend reinvestment program. And the other reason, if you are a more active trader, I just think that from an options chain perspective, that there's a lot more advantages. But I like how easy it is to explain things on Robinhood and for me to walk through my opinion on these stocks. So that being said, I do still intend to make videos in this format, but you will most likely see myself being more and more inclusive of my TD Ameritrade portfolio. So with that being said, the first company that I want to look at, because honestly it's the one that I am going to be looking to play, is Facebook. Facebook is currently sitting at an all-time high that you can see here. So the 52-week high of 250.15. This has been broken earlier today, so this is not updated on Robinhood because we are trading after hours. So if we intend that this is going to open up early, this is the play that I'm looking for, and I'm going to show you how I'm planning on playing this. Whenever we have options, the first thing that you're going to see when the market opens tomorrow is all of these options that are in the money are probably going to be more valued than they were today. I mean, as you can see at market close, this 242.50 contract, and again, this is for next week. You're not going to be able to play dailies. You're going to see that this is actually not going to be applicable anymore because it is going to be $8 at least, I would imagine, so more than double. But what we're going to see is some of these outlier contracts right here, they're going to drop at the start of the day, maybe not an insane amount. But the reason for this is because all of that excitement, all of that expectation is going to basically be satisfied. Something that we can't really look at on Robinhood, but would be the daily contracts. And those are the ones where you can have a better option to do this. But what we're looking at is see, okay, now that we've seen some of the IV crush or that volatility decline because we're no longer worried about earnings, you should see a decrease there. I think that this would be a good time, and again, this is the two types of plays I'm looking at. One is to capture one of those calls after they drop. So if we were to see a 265 or 270 call drop to the levels that you see here on the screen, because again, this is a week out, then I would buy one of those because I do anticipate a continuation tomorrow. I don't think that 270 is out of the realm of possibilities. However, on the reverse side, if we do see, or if we aren't able to catch that drop and then elevate back up, because you're not necessarily going to be able to see this on Robinhood, what I would prefer to do is to sell a credit spread, essentially something along these lines right here. So maybe 265, where I would buy a call and then sell the one below it. Here I would get $10, but you have to remember that there's going to be a lot of euphoria for tech tomorrow, a lot of excitement, and the reason why I'm hesitant to do this at this point in time, I'd probably wait for some of that to die down, is because these prices are going to shoot up. And again, we've got a lot of increased volatility, but there were people that were looking at this for the contracts that end tomorrow, and a lot of that is going to just be completely crushed. But again, if you were able to do that on the 255s for end of day tomorrow, although I think you'd lose on that, then essentially what you'd be doing is this trade right here, where you'd still be getting $50. So it'll be interesting to watch. Those are the two plays that I'm going to be looking at. Again, mostly Facebook, just because from a financial standpoint, it makes a lot more sense. But all of these tech stocks are going to be applicable. So again, Facebook just absolutely killed it on earnings. I have noticed, again, you can kind of see that right here, that we haven't exactly had Robinhood be great at updating all of their information on the earnings page here, but they did have an earnings beat. They had like 7% ad revenue growth. It was pretty crazy. So Facebook did a very good job. I would be watching Shop as well, just to check that out. And again, they are working in tandem. Shop announced earnings earlier this week, and they're just absolutely killing it. All that being said, the other companies on the list, I don't want to talk about Apple as much, although they did have an earnings beat. Apple is a big company. They're a good company. I just don't play them very often, but they are just rocking and rolling. Again, on the 1 year, you can see here that they're up nearly 100% year to date, or over the past year. It's insane growth. The one thing that I've been impressed with as a result of anything and everything Apple really did this year is how well they've weathered any form of China news. So they just haven't had any problems with that. I mean, they just continue to perform very, very well. I find that very impressive. I think that that's largely because they've been able to bring a lot of production to the United States, a lot of distributors out of China. They have been able to kind of get away from that, but I would continue to watch that. Again, the options here, the same thing could be applied here, where you can kind of look at some of these higher options. But as you can see, because it's a more expensive stock, these are not accurate options prices because they don't update after market close. But as you can see, we're still up a lot, but the same priced options are double what we were looking at for Facebook, because the stock is more expensive. So a 1% move at $400 is not quite the same as a 1% move at $200. But this one did very, very well. I actually want to see, I was looking at the 400 debit spread, and obviously I did not pull the trigger here, but that would have been a little nice to walk away with. But no coulda, woulda, shouldas. Lastly, this is more just so that we can talk about it. Amazon, holy crap. So they're up 6% after hours. This is not an all-time high. Again, they crested 3.3 back in the beginning of July. I think they're going to blow it out of the water tomorrow. Again, another revenue beat. They are just absolutely killing it. Google also beat on earnings as well as revenue as well, although again, just these two companies just very difficult to play. I will say, if you are a passive investor, Amazon, in my opinion, is going to continually dominate the space. The only thing that could hurt any of these companies at this point would be an antitrust suit. but they are just dominant in the industry, and I don't see anyone competing with them. If anything, Amazon just continues to innovate and out-earn. So all of that being said, all of these are some of the largest companies in the United States. They make up a huge percentage of these weighted indices, and I anticipate that they will continue to rise tomorrow because they've essentially shown, hey, even under worst case scenarios, when all of you thought that we could make it, we came out and showed you that we can make it, and we can do a really good job on it. So I've been very impressed. These are the plays that I'm looking at. Again, largely going to be watching Facebook. So for those of you who are looking to do options, looking to do trades, I hope that those were helpful. If any of the other content I used today is helpful, please let me know in the comments down below. And if you have plays, please place those in the comments below. I appreciate your support, and thanks for watching.